Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, coming to you live from the Verified Investing Studios. Hope everyone's doing well today. Overnight, the futures dove. I mean, holy cow, what a drop. The Dow Jones Industrial Futures were down almost 500 points. Now they've recovered. We're going to cover that. We're going to look at Netflix earnings as well as lots of other things. All right, into the action we go here. Let's go right over to our data points and bring up our key market blast. So right to the Verified Investing website, clicking on this data point here, market blast, and we scroll right down and we get right into the nitty gritty. Okay, so what we have going on here, guys, is the S&P futures were slammed in the overnight, Israel striking back at Iran. Ultimately, it was very clear pretty quickly that this strike was so limited in scope to the point that, in fact, what I'm hearing is the Iranian government and the state-run news is not even reporting it as something that Israel has done. So again, very limited. This is actually a de-escalation if this continues on this path. And what we saw in the overnight, oil spiked higher, the S&P futures collapsed, even Bitcoin briefly went down, broke 60,000 before recovering. And again, oil, which was up, $3-4 to be honest, off of this initial news, is now back down again. And remember, interestingly enough, oil yesterday, I was talking about how it was due for a bounce. There was your bounce right there, $3-4 bounce, and now it's back down. We'll look at that chart in just a minute. Okay, Netflix reported very, very solid earnings, great subscriber additions, but the key here is guidance was slightly light. Another thing that really kind of spoke to me was that they said they are no longer going to be telling us what their subscriber numbers are. And again, their justification is essentially, it doesn't matter because it depends on how much we're making off each subscriber. If a subscriber's paying the discounted version with ads, or if it's, it's ultimately they're viewing it as not as important. I think they're doing it because they know their subscriber numbers are going to start to stall, and that's a negative. It's always about, when it's a good number, you want to report it, right? When it starts to slow down, you don't want to report it. And you can see the stock today is dropping. We're down about 6% on Netflix. We're going to look at this chart, look at the technical levels. I do have a few technical levels, 573, which is basically right where we are right now, pre-market, and then we have 567 and 555 as the technical supports. American Express reported earnings, generally very good earnings. The high-end consumer continues to spend. They are, again, generally a high-end consumer credit card company. All right. Lastly, Procter & Gamble falls a little bit on earnings, an earnings beat, but guidance, again, just a little bit on the weaker side. And by the way, just going back to Netflix, Netflix was up about 30% or so going into earnings since the start of the year. Remember, the higher a stock goes up into earnings, the higher the bar where if it's going to continue to go up, they have to perform. Very hard. There's a lot of stocks out there that have gone up so much in the first quarter of the year that when these companies report earnings, it may be a little tough for them to continue to see gains in their stock price. Okay. Remember yesterday, guys, I said I would let you guys know what we were doing as an appreciation for the wheel spin, and it was 50% off anything on the website, anything on Verified Investing. You want a year of the chat, it's half price. Again, that's a $4,000 product. $2,000 is what the cost is. You want the Winning Trader series, which is thousands and thousands of dollars. It's half price there as well. So again, we're going to spin and find out who wins today, a 50% off coupon for the Verified Investing website. All right, so here we go, guys, and let's see what it ultimately comes out, and then we'll get right into the charts. And the winner is, here we go, Buzz Nightmare 1313. Buzz Nightmare 1313. Congratulations. Remember, in general, guys, you have 1 week to reach out. If you don't reach out, then it goes back in the pot for someone else to win. So just a reminder. In addition, don't forget you have to email Lawton@verifiedinvesting.com and he'll hook you up with anything you need to get your prize. All right. Let's go into the charts here. As we go in, I want to start with the DXY and the dollar again, guys, still well in the zone of a breakout to the upside. So again, we had this bigger wedge pattern on the US dollar. We can see downsloping lines. We kept hitting, and then we broke out, retraced to the scene of the crime, and then again, you get that move up. That's so common. In fact, if you watched these game plans for even just a month, and I've now been doing them for almost a year. But if you've watched this for just a month, how many times have we talked about a breakout with confirmation and then a retrace to the scene of the crime? Happened again on the dollar chart. Now, the question is how much more upside is in the dollar? Well, for me, a lot of this has to do with what about rate cuts or rate hikes? If the Fed remains hawkish, that will keep a bid under the dollar. If all of a sudden we see economic news starting to falter, then rates come down, the dollar comes down. The other thing that's driving the dollar higher is the geopolitical tension, right? There's no denying that when you broke out and you were in this area, this is when that escalation in the Middle East really started to take place. And again, that's been pushing the dollar higher. The reason why geopolitical issues cause the U.S. dollar to go up is because the U.S. dollar is a safe haven asset to much of the world. They rush into the U.S. dollar when things get scary everywhere else. Okay? So again, that's just a good little tidbit there in the charts as we continue through here. And again, we'll get into some additional charts. Looking at the 10-year yield, look at what happened here, guys. This is remarkable. So if we look at the 10-year, we knew we were in this channel, right? And channel, again, it means two parallel lines. So you have the parallel lines here, here, and then on the lower side right here. Now, what's so cool about this is that if we just go back to earlier this week, I said, guys, I think we're going to go to 4.7% on the 10-year, and then we're going to pull back. Sure enough, we hit 4.7% on the 10-year, and then we pulled back. In the overnight last night, when you had this stuff going on from a geopolitical standpoint with Iran and Israel striking back, we saw yields drop sharply right to this dotted line. Now, this dotted line might be harder for you guys to see, but the dotted line here is the midpoint of this channel. The midpoint actually has some power to it. In fact, what I mean by that is if you look at right here, right on that dotted midpoint, right? If you look at this point, this was right on the dotted midpoint there as well. And then again, if we go over here on the dotted midpoint there and right over here, dotted midpoint. So the point being is that we retraced, and this would be, by the way, this would be a 50% retrace of the low of this line to this high. So you did a 50% retrace, and then yield snapped back as obviously the escalation. It looks like it was more de-escalatory in terms of what was going on there, meaning the strike, again, was very, very minimal, concentrated to a point where, again, as I said, Iran, and from what I've heard, the state-run media is not even reporting it, probably because they know if they report it to the public there, then they're going to probably have to act and retaliate back. And so this is a good sign that they're not doing that because it shows that they don't want to escalate the situation anymore, at least for now. Okay. So that's what we have on this. Again, if we did continue to come in, I think this zone down here around 4.35 is your level to watch on the 10-year yield. Going to the S&P 500, I've given you guys this level for many, many days, maybe even weeks. We knew that we broke this wedge pattern. Remember, when you break wedge patterns, it's usually a pretty waterfall event, and that's exactly what we saw here. So notice how controlled this was. Very much controlled, right? Just up, 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 getting tighter and tighter until price is forced out of that zone, right? It's like squeezing it, squeezing it, squeezing it. It has to pop out one side or the other. Upsloping wedges like this, generally, probability-wise, they break to the downside. What happens? You get the waterfall event, but you're going to start to hit support, and buy the dippers are still lurking. So again, one of the lines I'm watching today, and again, there's no guarantee that this is the line that gets us a bounce in the markets, but we're looking at 497 on the SPY here, which is the S&P tracking ETF. So that's a level that I'm guessing hits today. I know the markets have recovered from their overnight losses. We're basically flat last I checked. But I still think you'll get a little bit of selling considering we're going into a weekend where, yes, things look like they're de-escalating in the Middle East, but you just never know. 2 days where the stock market's closed, you just don't know what could happen. Look at what happened last week, and I think that at least pushes the market down a little bit during the day to, at minimum, tag this level. All right, on to a couple other charts here, guys. Let's quickly go to Tesla. Tesla, look at this recovery on Tesla pre-market. So Tesla was trading near 145. It's back to 149. I continue to like this chart. I got to be honest. The daily chart is not a bad chart. It has multiple supports. It also has a positive RSI divergence. And again, when the consensus is negative, and to the point of everyone being negative, or at least in recent history, I start to look for these divergences, right? And so you have this, this, and this. These are all higher highs here, right? And then again, you look at the lows have been lower lows. And so that to me is a signal of accumulation where it doesn't necessarily mean we're going to go back to all-time highs. I mean, who knows about that? But in the very least, we should see some sort of bounce back up, maybe back to these recent highs around 170 or maybe higher. But in the very least, as a swing trader, I take note of the very negative vibe on the stock and then start looking for the positive signals in the technicals, which then tell me, maybe give me just a little bit of an edge to be on the cutting edge of a potential bounce in the stock, all right? So just something to see there. Now we got to talk about Netflix. Let's go to the intraday and the pre-market action on Netflix. This was wild yesterday. We actually watched this live during trading the close with Tony yesterday. It was an amazing wild mover. We initially flushed, then we popped, then we flushed, and then we trailed off to the downside. So right now we're a little bit below that first support that I had on my chart that I showed you guys, where I talked about 573 was first support, okay? So the question then becomes, where is your secondary support? All right, so if we flip back to the daily chart, the first thing that you have to note is that you had this bigger wedge pattern. Now, according to this point, right, we have take this low to these lows, we actually hadn't broken it going into earnings. So it was still in that zone. So when it's in the zone, it's very hard to know, are they going to pop it back here, or are they going to push it and break it down, or maybe just keep it in the middle, right? We just don't know about that. But the point here is, at this point, you got to assume that it's going to break. I mean, I would be very shocked if it recovered all its losses today and went green. So it probably breaks the wedge pattern. Now, on a technical basis, there's a couple levels to watch here, and I'm going to draw them on the chart because it's going to be too hard for me to do on the actual screen for you guys. So one level I'm watching is right in here, and hopefully you guys can see the line and why it's a level. I'm going to draw number 2. Number 2 is a gap fill right here, and number 3 will be gap window. So these are your next 3 levels. First level is 567 to 568. That's basically where we are right now. Now, to be clear, as a day trader, when something's already at that level, I'm probably not buying it there. All right, I like when the market opens, I like a flush. A flush means panic. That's where the calmer mind of myself can say, okay, we're now hitting the next level. This is panic selling, and we can get a bounce. But when we're already trading here, it means that there's too much opportunity. Too many people are able to get in, get out, do whatever they want. I usually pass. So the first level, to be honest, I'm going to pass on. All right, so again, and then by the way, I'm going to go right here. Apologize for not showing it. So here's your chart here. This is the current level we're trading at, 567 to 568. That one to me now off the table, considering we're hitting it pre-market. So again, I'm going to take that one away. The next level that I'm watching is this gap fill right here. This one's just below 560. To get you guys an accurate level on this, it actually is right at 555. So 555 is our first level, and our second level is a gap window, which is this area right here, and that's at 538. All right, so 555 and 538 on the chart. I'll write those in, 565, 555, bear with me there, 555 and 538. Those will be my 2 levels that I watch today. Now, at some point, there's a gap, a massive gap here. At some point, I think that gets filled. For me, that's more of where I might be interested in swing trading it. So you have to differentiate. These levels are just day tradable, maybe. And I say maybe because in the live trading room, when we're in the live Apex trading room, it depends on what's going on. We have to look at multiple factors to see if it aligns for our high reward, low risk setup for a bounce. This one, though, this one would be more interesting on a basis of a swing trade. It's around $480. That might be a bigger bounce for multiple days or even weeks if we come back in. And remember, the earnings from Netflix were pretty solid. I just think the stock was up way too much going into them. And that's the nature of what we see. American Express, not much going on here, guys. If you look at the pre-market data, a lot of chop, but we basically closed right here yesterday, and we're trading right in that same range. And also, if we go to the daily chart, it had pulled back going into earnings a little, and it's still holding this secondary parallel, right? So we're right in this range. Now, if it breaks this parallel, let's say we close at 215 today, then you start looking at maybe some weakness in the stock where it could continue down. Ultimately, I do think that whether it's 5 months from now, 6 months, 9 months, Eventually, even the high-end consumer will start to pull back. But for that to happen, the stock market has to start to come in even more. So just a reminder that generally the wealthy have more investments in the stock market. The stock market, even after this pullback, still very close to all-time highs. They're feeling great, right? I mean, they're like, holy cow, I'm making money hand over fist in the stock market, therefore they're going to continue to spend. It's when the stock market corrects 10, 15, 20%, that's when those players start to pull back, and that'll be when probably American Express really starts to roll over. All right, let's go to center screen here, guys. We're going to spin the wheel here, find out what we're giving away for Monday, on Monday, and again, let's see what we got. Oh, man. I tell you, Fridays must be a thing here. This is the third Friday in a row winning Trader Series. Holy cow. That's freaking awesome, guys. Very cool. I guess it's winning Trader Fridays. That's what we're going to call it now. So I will tell you at the end what I want you guys to answer in terms of the question. And again, congratulations, that winning Trader Series. Don't forget, guys, that's almost 20 hours of me teaching everything I know for the last 25 years since I've started trading. Every lesson I've learned, every pitfall I've fallen into and now avoid, every technique that I've come up with that is institutional based, meaning that people in general don't know these things, that's what's in the Winning Trader Series. It will blow your mind. I hope one of you guys wins it, and someone will win it that's watching right now. All right, let's go into the next charts here, guys. So the first chart I want to take a look at, we got to look at Bitcoin. So Bitcoin, we saw it initially flush on fear, right? So the fear was we had the escalation, potential escalation with Israel striking Iran. We dropped down right back to that technical support. We then bounced well off of it and are trading at 64,600. That's a great bounce. But again, if you remember what I talked about yesterday, we now have a confirmed support. So this is major support. So really, you wouldn't expect it to break here. Like, even though we hit it a couple days ago, when you have such a major support, it's going to take more time than just a couple quick hits on this before it really breaks to the downside. So you have confirmed support, and we confirmed this as resistance, right? So you now are essentially in this period where price, like I said, could go like this, and unless we break one way or the other and confirm, you're just stuck in a range. Like, this is range trading to its finest in terms of Bitcoin. Now, again, we do have the halving that I think later today goes into effect, so we'll watch for that. Does that have any additional implications? The only thing I will say again is that the halving to me meant a lot more years ago because there was a lot more mining going on. At this point, I think we have 19 million Bitcoin already that have been mined. There's only a couple million left, or even less than a couple million. So it doesn't have a huge impact on supply that's available to be sold versus what the public has, what the institutions have. And I think that's just something to remember, is that for me, again, going forward, the mining, the halvings probably play a less and less significant role because you're not cutting down on the amount of supply by a massive amount because, again, so few coins are left in the system. All right, couple other charts here, just quickly looking at Ethereum. What we can see on Ethereum is that it hit, again, same thing, same sort of technical level here. Here's your Ethereum chart. Again, we had our 4,000 and change high up here. We retraced back into this support. We kissed it last night, and we bounced a little bit off of that level. This is the weekly chart, by the way, so it looks a little different. But the point is, this is your level to watch right here, right around 2,900, 3,000. If you confirm below this level, you'll probably go into this zone here, maybe 24, 2,500, but eventually this 1,800 is a possibility. But first and foremost, you haven't broken below. So as of now, this is your likely, some sort of bounce is the likely factor here until you probably get into this zone. See these lows right here? See how those right there? So you have upside probably to about 3,400, 34.5. And then again, the key support is 29 to 3,000 on Ethereum. Now, gold was a wild one too, guys. I mean, anything market related had wild swings. In fact, if I bring up this chart on gold in the overnight, this is your 10-minute chart. Look at what it did. It had this huge pop, huge drop. This was initially when we heard about, oh my goodness, Israel striking back at Iran, and then we said, oh, wait a minute, it wasn't really that big of a deal, and then it comes right back in. Now, for me, what are the things that I look at? So number one, the daily topping tail is the most significant. And I've said this every day since this occurred, that this candle here is the dominant candle. It is what it is. Now, notice how when we had this escalation and gold popped, it still didn't even pierce this level, right? This is a lower high. So that continues to make me think, at least in the near term, that the probability is for a little bit of a check back in gold back down. Eventually, my long-term view continues to be the same, which is upside on gold. But right now, again, I would still favor a pullback on gold. Max downside would be 2,200. Then I think 2120 maybe, and then 2080 is your major level. That would be a gift. If we get back there, that's a huge gift. Oil, here you go. Oil hits my level. I called for this drop earlier this week. It goes right there. Look at what happened. It traded all the way up to almost $86 a barrel from 82, and then we came right back in. Now, listen, we have a level here that we have to, this has to hold on oil right here. If you break this and confirm, honestly, I think it's the beginning of a much bigger move down in oil. All right, so you still want to respect it, respect this level here. But if we break down here and confirm, you're probably headed back to about $70. You'll probably go all the way back down towards the low end over here. So just keep an eye on this. And again, for me, the case for lower oil is going to be when the U.S. economy cracks. All right, as long as the jobs numbers, and we saw again the initial claims this week, they were pretty strong. Okay, so for the most part, oil should probably hold up there. But if we see a crack and more people filing for unemployment, the non-farm payrolls goes negative, that's where you see oil really start to drop. Lastly, we have our Nat Gas chart, guys. Nat Gas just doing its thing. I love that it's starting to come back up. This is going to be huge. Can we get back up here? We're getting close. We're getting close to this high, which is around 2 to 205. If we can bust through this, then this is where you're headed, again, around 220 to 225. Could it go higher than that? Of course it could. But you just want to respect it as resistance. There's two trend lines coming into that zone right there. All right, guys, I think that's good enough for today. Going into a Friday, as always, guys, I wish you a wonderful, wonderful Friday. Let me just think of a question right here. All right, as a question, guys, what is your favorite thing to trade? Is it Bitcoin? Is it oil? Is it a stock in particular? Are you someone who just loves Tesla? Let me know what your favorite thing. I'd love to look for consensus in these things. It always makes me excited to see, like, you know, wow, look at all these people that just love to trade Tesla, for instance, or something like that. So what is your go-to? If you had to pick one stock or one asset, what's your go-to to trade or invest in? All right, guys, have a wonderful weekend. I will be back Monday bright and early, 9 a.m. right here live, as I always do. You guys have a great one. Take care.